Hi, I'm Simeon Wallace, Chief Investment Officer of Apri Wealth Management, and welcome back to The Pulse, where we take a month-to-month look at what happened to the economy and the capital markets to make better decisions in your business and with your investments. Equity returns are broadening. The S&P 500 equal weight, small caps, and international markets, especially emerging markets, are leading this year, while the S&P 500 is flat and the NASDAQ is down a few points. Interest rate expectations are driving cross-asset moves. Bonds are up on the year, oil's jumped higher, copper's been mixed, and Bitcoin has fallen sharply. The earnings story is improving. Estimates for the next 12 months continue to rise, and strength is showing up more broadly. Estimates for developed and emerging markets surged to start the year, helping drive those leading returns. The bond market is weighing two uncertainties: inflation progress and the future direction of Fed leadership. That has kept yields stuck in a range with optimism that they could go lower. Real-time inflation data tends to lead CPI. Now, since late summer, goods, services, and core have cooled together, easing pressure on the Fed. GDP now is pointing to a roughly 3% growth rate. The pace is cooling, but not collapsing, even with the shutdown effects. Manufacturing is showing early improvement. New orders relative to inventories are re-accelerating, and that usually means demand is stabilizing. Capital spending is growing too. Core capital goods orders are rising, which suggests businesses are investing in productivity and capacity. Now, hiring is improving at the margin. Private sector payrolls outside of healthcare are trending more positive versus mid-2025, though they're still subdued. Demand for trucks is turning up. Class 8 truck sales are now positive year over year for several months after a long decline. Freight rates are rising, another sign goods demand is firming. And tech CapEx remains a major force. Hyperscalers are projecting nearly $650 billion of CapEx in 2026, about 4 times where it was 4 years ago. The consumer is spending, but selectively. Categories of essential items are holding up better, while discretionary categories like electronics, furniture, and travel remain soft. To sum up everything from today, here are the key takeaways. Leadership in the stock market's broadening, tied to those who benefit from lower interest rates and economic growth. Inflation is decelerating to levels that enable the Fed to cut rates. Manufacturing is showing green shoots, and businesses are investing in productivity and infrastructure. Now, while the consumer continues to spend judiciously. With that, I'm Simeon Wallace, Chief Investment Officer of Apri Wealth Management, and I'll see you next time with our next edition of The Pulse.